Good evening, Wizards, and welcome to episode 9 of Wizard Wednesdays. Now, first and foremost, it's amazing to be back. I know it's only been a day off, but it's very out of character for me to take a day off and get away from the screens and charts for over 24 hours. So, as refreshing and as great as it was for the brain and mind, I felt very irregular, so to speak, not actually having any chart time whatsoever. So it goes without saying I've had more than enough coffees and I'm back in action. I was thrown a surprise birthday party for those of you who thought I may have died. I was surprised at my own rooftop terrace, and therefore I couldn't really go onto the charts as I was with all my family. However, we are back in action and it's time to get back to the charts and have a bit more of a breakdown, in particular on the likes of BTC, as we are seeing a massive market dominance increase. However, after going through the little Twitter questionnaire as per, one of the biggest discussions at the moment besides XRP and BTC pricing is of course the topic of Binance and Bitfinex and storing cryptocurrency. Now, guys, it's not rocket science. It goes very simple to say that a Nano, Ledger S, or a Trezor should be your first port of call when it comes to actually storing your cryptocurrency offline. If not, simply use the Nano Ledger S to store it in Mu, which is my Ether wallet, and then you can store many of the ERC20 tokens there as well, or any other token based upon the Ethereum blockchain. It's pretty much a necessity these days. As long as your funds are pretty much exceeding the value of one of these hardware wallets or devices, you should 100% be owning one. It does not matter if you are only holding $100 in cryptocurrency, if that is a significant amount to yourself, or if that is a figure that for you will be valuable one day in the future, which, to be honest with you, even $100 in the crypto market with the right investments or even margin trading can grow to a fairly substantial amount. And I think it's very important to be understanding these procedures for yourselves, to take every single safety precaution you can. Now, people ask me, we know Bitfinex is great, we know Binance is great, we know they are revolutionizing the exchange platforms just like Coinbase, but does this mean you leave your crypto on them? Absolutely not. There was a point in time where I had over 700k on Bitfinex, and only now when I look back at all of this drama, I start to think, what on earth was I thinking? So it really goes without saying, guys, please store them offline in your wallets, because I don't care if they're in hot wallets or cold storage held by the exchanges themselves. You are not the owner of the private key. Therefore, the exchange is fully responsible and entitled to your private keys and of course your overall cryptocurrency holdings. When they are hacked, that is your crypto that is also being stolen. And a good example is Binance, and also a bit of suspicious activity, which we'll get through on this article as well. So you may have seen on Twitter, if I quickly go to the tweet today, I will just show you why. Let's go to the tweets and replies. Many memes, many memes, but let's get through those memes here. So a report from Syscoin team following unusual trading of Sys in 2018 on Binance. The report shows that the same alleged sum of missing funds in the present scenario is the same as the Syscoin scenario. Maybe they have an internal trigger to limit activity of the 7,000 BTC. So Binance reset their API keys following the Syscoin scandal 2018. As you can see, that was July the 5th. Pretty much alongside the similar point in time just a year back. So Binance acknowledged the role, but they did not actually discuss anything regarding this matter, and they were in some sense trying to cover up the fact that the funds were stolen, and they tried to blame it on a network and blockchain glitch in the beginning. And to be honest with you, there hasn't been full transparency with the same scenario either. So we are seeing that there is allegedly 7,000 BTC missing, and that's all that they store in their hot wallets. However, I have read from multiple sources as well, it's worth looking online, that there is allegedly way more than 7,000 BTC in those hot wallets. But regardless, I do believe the funds have been stolen. And for me, it just goes to show it does not matter who the exchange is, how much action they've made in the space, how much progression they're making. This is why when it comes to margin trading as well, many of you ask me, what about margin trading? How do I trade on an exchange? Well, first of all, everything should be in an offline wallet or a hardware wallet as stated. However, anything you want to trade, just keep a very small significant portion should you wish to use an exchange for margin trading. However, there are perfectly fine brokers, and there's BitMEX as well. Now, BitMEX, I believe, has been hacked once or attempted to. However, nobody really has too much of an intention to hack BitMEX versus the likes of actual exchanges, because that's where more of the rookies actually go on to purchase their first crypto. Many of them do not have two-factor. Many of them miss out on the key security measures that are necessary, so they can get their funds stolen relatively quicker. Whereas BitMEX, there is just a bunch of people trading BTC. However, there hasn't seemed to have been as much attention going towards BitMEX. And again, it goes for brokers. If you want to margin trade, any broker you choose right now, guys, I cannot stress this enough. There is no specific golden broker that will provide you glorious fees and minimal spreads, etc., and swaps, because they're all charging substantial amounts, because there is still not enough liquidity in the crypto market to be providing very small figures of spread. And that goes for the majority of the brokers I use. I use Hugo's Way for crypto, Forex indices, etc., and they are using Bitfinex as a liquidity supplier. And liquidity providers like Bitfinex, the problem is there is still major manipulation going on. I mean, absolutely huge amounts, where sometimes stop losses will not be hit when there's a massive news event or a volatile spike. So the market's constantly fluctuating between periods of illiquidity towards liquidity, so you can also get caught out on that aspect as well. But I would much rather know that my funds and my entire amount of funds will not be stolen, because I trade with risk management. I use stop losses, and many people seem to think I do not use stop losses. I use stop losses on every single trade, and it goes without saying there are times where even a stop loss may not get hit due to slippage, but I would much rather take the risk of my stop loss being hit approximately, give or take, around my calculated risk amount, versus losing my entire amount of funds on one platform in one go, which may or may not be returned to your wallet. You never know if you will get those funds back, and even if you do, it could take a very long time. So we'll kind of link this in a minute to why I believe a potential BTC dump is still due to continue, and we'll get to that in a minute. But going over back to here, there is a very interesting theory here. The hack may prompt Binance to push more users to Binance DEX, its recently launched decentralized exchange. Now, let's talk about coincidences of all coincidences. I do not want to point any fingers or anything of the likes. However, let's be honest here, there is some very suspicious stuff. It's very convenient that the decentralized exchange, which is what we're pushing for, is kind of there in the limelight now as a temporary necessity. So they are offering extra security for concerned users, and almost what a way to... For all we know, guys, they may have faked this. Let's be honest with you, this space is unregulated. There is manipulation 24/7, and I am one of the biggest tinfoil conspiracy people in the crypto space. I always leave my eyes open. It's not even tinfoil, it's actually just a bit more conscious and woke of what is actually occurring in the world globally. Many of us turn a blind eye to the popular faces we trust, and it could even be people you see every single day, the likes of Justin Sun. Let's get a bit further into this. For example, he has offered to deposit 7,000 BTC worth of USDT. Now, of course, it's going to be USDT. I mean, let's just put two and two together here. We have Bitfinex currently in issues with a Tether scandal as well. Withdrawals are pretty much temporarily a bit... I was about to swear there, a bit messed up right now. Whereas you have Justin Sun over here, also now suspiciously heavily linked with USDT, and again, to support Binance, he now wants to deposit 7,000 BTC worth, which is 40 million USDT, into Binance to buy specific tokens. And again, guys, listen, I know you say it may be a language barrier and the way he presents himself isn't professional. I think he knows exactly what he's doing. We've seen the memes, everybody knows he is the king of pumps and dumps, etc. And for me, I'm just very suspicious of this man and the way he operates, and the fact that the biggest partnership he's currently announced is predominantly with USDT. It's just building a much bigger bubble. We know USDT was one of the biggest causes of the parabolic bull run in 2017 because Bitfinex and Tether were printing them like no tomorrow. The Federal Reserve would never be able to keep up with such sheer amounts of printing. So he's declined the offer, thank God, Mr. CZ. He has declined it, and we are looking at a slight drop in the BNB price as well. Due to this, we have actually hit BNB around one of our resistance levels, pulling back. Again, it just goes to show that technical analysis will always factor in the news before it happens. The famous quote is, buy the rumor, sell the news. And the truth is, once the news comes out, it's more likely than not we are going to see some substantial movements, but the technical analysis should already be providing that. That's the beauty of technical analysis. Many people do not believe in it. However, the truth is it does show a lot more of what could be unfolding in advance. Now, Going over to CoinMarketCap over here and looking at the BTC dominance, guys, it's just growing more and more by the day now. And this is really grabbing my attention for what BTC could potentially be indicating as the next movement. And it's kind of moving in a bit of a different correlation now. We are slowly seeing a slight detachment in terms of the current price action where the charts are, the candles are placed on the charts, whereas BTC is a bit more near yearly highs, pretty much at yearly all-time highs, whereas the likes of XRP and Ether and LTC are still fluctuating in between the middle point of the highs and lows of the year. So the total market capitalization, where's the dominance gone? It has slowly been increasing after dropping to nearly 49%, I believe it was over here somewhere. Slowly dipping lower. We did see 49% at one point this year, I believe, but overall we have now creeped our way back up to 56.5%, just showing that BTC's dominance as it's been climbing higher has been progressively increasing. Now, let's introduce a good old familiar face, which is the total market capitalization chart, the crypto cap. This chart for some reason takes an extraordinarily long time to load. I believe it's just due to the sheer amount of data it's potentially calculating. I'm not sure, but let's just let this weekly load for a second. But as you can see from the daily now, many rejections around this region on this key round number figure. We are just rejecting. We've broken higher, but we are still testing those downsides again and again. So although it's faint, we can technically use this for some TA right now. Let's see if this even works. No, that will not work. However, looking at this right now, although we have the weekly and the daily not closing yet, this is the daily candle, and yet another attempt to breach higher, tapping those psychological round numbers of market capitalization and pulling back ever so slightly. This is leading me to believe this is a breakout of some extent, but I do believe very similar to what we're seeing here. We are just seeing breakouts with many attempts now to stop hunts. I know we were initially caught out on that miscalculated short around this region here, but if we go to BTC for now, seeing as this is showing a bit more clarity, if we actually look back at the initial trade direction here. So here's what I'm going to show you. So where we initially thought the short would occur here, I'm using the Bitstamp chart now, by the way. We have to look at this realistically. Many people were celebrating BTC being met at $6,000. And again, technically, we did on Bitfinex, as I posted on Instagram as well. But looking over here on this side of the chart, from the Bitstamp chart, without the inflated price, we haven't even touched $6,000 yet, which if you now look at this Fibonacci setup we have here, the A, the B, the C, trend line, nice and clean. Let me just sort that out. We have a trend line. We have the Fibonacci setup. We tapped the first level of the extension. We've pulled back, rejected the resistance turn support, which we can now highlight as a nice key level. I will be using this chart for the time being. Now, although Hugo's Way does not work upon this time frame, you can use this in synchronization with the Bitfinex chart to get an overall understanding of what's going on. You could also use the BitMEX chart as well if you wish. However, for now, let's remain focused on this. So having a look at this right now, resistance broken, tested as support, first Fibonacci target met. We've broken above this level, we've pulled back, we've now tested it as support, and I do believe we are going to see that final push to $6,065 on Bitstamp. Now, I do not really care what happens on Bitfinex for the time being. All I know is I'm following this time frame. So many people will likely be shorting here. I actually caught the quick short down from here, closed out. And many of you, before I actually took my day break when we saw this initial breakout here, when we scalped in and scaled in all of those entries, the first thing I said upon breaking out was scale those stop losses to either take profit or break even. We know the procedure now. When I'm covering stop losses in that Telegram, you know what to do to protect yourself. And it's a very simple strategy, because in events like this, when the market swipes against you, you've secured a profit off a very significant move. Remember, we are expressing gratitude for such a significant move in the market. Seeing this in the likes of indices and Forex and stocks is not consistent, but in crypto we see them, so we must secure those profits when necessary. Price reversed against me. 2 positions were closed at break even. The other 2 or 3 were closed at a slight little bit of profit. I'm talking just a few $100s. Price then reversed, pulled back. We are now looking at what could potentially be the final stop hunt around this region. Look at the precision. The 5,900 right now. All you are seeing is this floor, or this roof, so to speak. The resistance is holding ever so precisely, dropping down to the 1 hour, scaling down there. It's holding like no tomorrow. We have a little trend line forming here as well. just there, that's holding right now, but of course extending this out, we are allowing ourselves the possibility of a potential tap just above to this level here. However, I wouldn't really be shorting just now because we have that Fibonacci extension just above. This would confirm, should we see some spikes above, this would confirm a real spike through $6,000 where the real sell orders are located, because this is really a $6,000 wall. As we can see here, huge daily wick, suggesting a significant reversal is coming. However, it's also suggesting from this huge movement, we are seeing attempts to breach $6,000. We've seen it here many times over where we could slowly consisted up to that level, started breaching around where those wicks were, tapped a little bit higher, push that down a bit. So realistically, we could see another tap breaching just in sync with this one did, and then seeing a potential sharp pullback. Now, what would happen once this Fibonacci level is met? Well, here's what we would do in this instance. So because we saw this already fulfill, and again, just use this as a wake-up call of what this market can do. Please do not get too excited by this bullish momentum. I've been waiting to make this video just to really indicate and clarify that you do not need to be so engrossed in bullish momentum. I'm seeing it on Instagram pages, I'm seeing it on Twitter, I'm seeing it on Reddit, on all the usual forums and news outlets I monitor. Everyone's screaming for bullish momentum, but as professional and calculated traders, we need to look beyond just bullish euphoria because there are Fibonacci levels in play. We are looking at long-term weekly targets here, and look at this. This taps in precisely with that zone I've covered in many videos. And now that Bitstamp is following the precise chart, we can mirror this exact same analysis, confluence, confluence, confluence with the Bitstamp chart instead. So realistically, we are going to see another push higher to this region where many people will be screaming on Bitfinex that price is breaching 6,300 to 6,400. In real life, we are only hitting $6,000 now, which makes perfect sense. We've breached. If you remember the original calls in the Telegram, $5,800 was the first projected target. Realistically, snapped that with absolute precision, pulled back. Saw some rejections through there, pulled back. We've now broken through that floor. We're now rejecting that floor as well, 5,800. We're now going to hopefully hit our second target, which was $5,800 to $6,000. Now I'm following this Bitstamp chart. I'm seeing the charts with much more clarity. So what would that mean in that instance? I believe that many people would still be fixated on the Bitfinex chart, looking for a bullish breakout, anticipating potentially huge movements to the upside. Now, I've already said, as you may know, the only thing I'm really remaining cautious of when we see an upside breakout is these levels here. No matter where it will be during that time, it could even be 7,000 by the time we initially plummet to that level. However, I do believe this will be happening quite shortly. So going over here on the daily, let's just say we tap this level and we pull back, which does make perfect sense for me. Imagine how many sell orders. Imagine this zone here is where people are placing sell orders. Can you imagine how many sell orders have been placed here in anticipation from how many buy orders were once placed in this exact same zone? We have not retested $6,000 since breaking out. And I said this when I called the rocket ship from here, that we would continue to $6,000. Anything in between has simply been an intraday opportunity where only one of the trades were really wrong. So I decided to close out the other one after entering a quick scalp to the downside, closing profit, because I started identifying this opportunity here. So to be honest with you, this should be a very easy upside target for the temporary time being, but I would not get too anticipated just yet. Should we see a breakout and it does pop to this level, there is still no bullish momentum. If anything, this would be an incredible short if we tap this level and break through this region. I'm not too fixated yet on seeing these huge levels up here just yet. I just do not think it's possible. And if we go back to what was stated before, we have this level here. Nice, 78.6 located just there, $6,500. And we also have these levels here, which we've just hit. So by the end of the week, if we close below, that would confirm, let's just say we tap here, close back below here. That would confirm for me a major reversal back towards what I originally stated, the Fibonacci targets just here. And let's be honest, guys, look at the perfection on these levels where they're lining up, $500 and $2,000. Of course, I wouldn't be surprised to see this, but we cannot disclose, we cannot disregard the possibility of this occurring. It's a very simple Fibonacci structure. It's been abiding by the same principles time and time again. So just as a refresher for those of you who are kind of new to all of the content and analysis I've been providing, if we drop this here, drag that down to the body as we did last time, 61.8 was met. We slammed straight through to our Fibonacci extension. Realistically, we can even do the body to body. If we drag it there, very nice. It's still very clean. We're looking at a little bit above $2,000. Or you want to just skip straight to where we are now. We look at the wicks there, 78.6. You want to push a bit lower to the actual low there. 78.6 has already been met. So anything in between, as you can see from the precision of that 78.6, let me just enlarge this a little bit. We have barely broken through. We've been holding that level with so much precision, it's unbelievable. Perfect confluence with $5,800 as well. So I'm just remaining vigilant for now, not necessarily of breaching too much higher, as this could very well hold itself, but going back to that daily, let's just focus on this $6,060, just barely breaching $6,000. My only concern is, of course, the significance of this level may also cause many spikes. Just like we saw through $5,000 here, you could be seeing those little breaches higher. But ideally, if we do see those breaches higher, guys, it should just tap here, boost itself an extra $200-300, tap this level, and what an incredible short opportunity that will be. So again, I'm not being too fixated on this bullish momentum. I do not care how long it takes for the market to go higher. Even if we see a pullback like this, as we are mimicking similar breakouts now of bullish momentum, let's just look at a pullback like this from several different regions. Again, this is how I look at charts on a more realistic level. Let's say we breach our way up to here, around 6.5. We are looking on the downside around $5,000 just prior to where price broke out, retesting where this place retested before. We would literally be retesting where price retested prior. Should we start rejecting from these levels, what a nice clear round number of 4,430. Now remember, this movement only took 2 weeks. This movement only took around 5 weeks, but yet again, they were fulfilling the same movement in size. What's this movement here? Pretty similar, to be honest with you, looking at this movement here as well. 1 week. All it can take is 1 week. Look at these candles. They are all I don't know what I just said there. They're all moving in symmetry. $5,600 all the way down to $4,000. A $600 move in a single week. What is to say this will not occur by the end of the week and shock everybody? This is why I look at all alternatives, because I do not want to be just like every other unprofessional or someone that's not too educated in this industry that just sees a bullish candle and screams bullish, 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 bullish. I need to provide you guys with logic, with clarity and confirmation. This is why in between the movements to this level, I was providing all of the counter trades in between and providing possible breakout scenarios, because if I just tell you we're going to go up, 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 it just shows I am not doing anything different and I'm just following the sheep of the market, which is how the sheep get slaughtered in the long term. Look at this on the 1 hour now, it's just rejections galore. It's looking great, but if we do this little fib here, let's see how this looks. So now that we know this is let's get rid of this as well. The A, the B, the C. Drag this over here. Again, I'm giving away a lot of content here, by the way, guys, just to kind of put that out there. This isn't stuff that would normally be given for free to the majority of people. And of course, this goes much further in depth when the Wizard platform launches. But I feel this is just so essential because I'm seeing so much content out there where people are screaming all of this crazy stuff to give out to the masses. And to be honest with you, it's really making me angry. So I'm going to just start giving a lot of this stuff for free as well, and then elevate on it much more. I'm just giving you the basics, but I'm just helping you see why I view the market in a different light and aspects to many people. So it's very hard to understand and see it in the beginning, especially for the new people in the Telegram. I know you guys have kind of been a bit concerned in the beginning, you know, why are you calling all these directions? But hopefully if you've seen from the prior month how precise the calls in every single direction have been for almost a month straight, you can slowly understand why these methods work. So let's say we hit $6,050. Perfect 5,400 level there, pulling lower around 5,200. Where would that slam us straight to? Straight to the trend line to continue our way up to these levels here. And what would that be? How convenient, it's the trend line retest. What would happen from there? The A, B, C, potential D, slamming us all the way down. Let's mimic a very nice movement from here to there, see where this lands us at. Bearing in mind that took around 4 weeks to fulfill. from around that level. Very similar price movements. Again, nothing I'm saying is illogical, just below the sub $2,000 region. Let's get rid of this. Let's mimic this one from body to body. Actually, no, let's do wick to wick. May even be the same distance. It looks pretty similar. A bit less. Let's drag it down. Where are we landing? Oh, we are landing at $2,500. Everything is lining up accordingly to what could potentially be a shock trend reversal before we actually blow through the roof. Because I truly believe this is not the bottom just yet, and I'm sorry for believing that, but I really just have a feeling, and looking at the chart analysis, it's not even about instincts or I don't know, being psychic. It's just showing you realistically what the price action is showing, and I'm just viewing the market in a different light to many people normally would. So going back to the daily here, hopefully you can see now this actually does make a bit of sense, but let's just say we pull back from here. Let's see what this would look like too. Pulling back from this current price point, again, 5,375 and 5,200, pretty much precise on the dot. So everything's making sense, everything is really adding up, and you can hopefully understand now why before we actually start breaching these levels, I am expecting a surprise reversal. So when it comes to actually potentially shorting, again, pretty nice opportunity over here. Just watching out for some stop hunts. You could easily average in your buys from this level, your sells from this region as well if you wanted. Just be cautious, however. Could see a very surprise bro through the roof before potentially reversing. So all we'll do in this instance actually is going over here right now. Okay, BTC is looking good. It is actually rejecting that level. Nice little daily potential closure as well. So all we'll do in this instance for now is just add one lot short. Let's go to the 4 hour, have a quick check. Rejecting this level already. So let's check if there's a Fibonacci on this as well. Hitting the 50%, although I do not use this, we have fallen just short of the 61.8. Nice little level there, broken, fallen back below. So as you can see, there is a bit of a divergence with the Bitfinex pricing. So looking at this now, many people are expecting us to actually be above $6,000 and break through the roof. So realistically, this could be a very big potential, but looking at where price currently is, it would be wise to at least consider a potential movement. So let me just quickly check my trades. Okay, they're running in profit. That's good to see. I will leave those running for now. So let's short BTC one lot for now. Looking pretty good. Again, a bit of a concern. We could be seeing a fairly significant pullback, but I am willing to swing this for the fairly large long term. So actually, no, let's be sensible here. Let's not do anything stupid. Let's just go for 0.5 for now. Sell. Again, let me just show you guys. When I say I play stop losses, this is what I mean when I play stop losses. I'm not doing this on a 15-minute time frame. I'm not going like this for a $80 loss. I'm going to the 4 hour, the daily or the weekly. I'm looking at where these wicks are. There we go. Wide stop losses. Many people get stopped out very quickly. However, knowing how this market moves, where have we gone? Knowing how this market moves and how rapid it can actually move itself, it would be very unwise to be attempting anything insane and trying to have very tight stop losses. The only way I get tight stop losses is when I'm literally entering off those perfect entries there. And again, the biggest question I'm getting right now is how do I adjust my stop losses? How do I do this? Well, let's calculate a little downside target. Moving average, which will be discussed much further in due time on this daily time frame. Dragging this down from here, even 50, 0.5 lots is around $4,000. So I'll leave that in line with my support floor there, just in case. Now, should we breach higher, what will I do again? I will repeat the same procedure I saw here. And to be honest with you, this just looks pretty similar to what we saw here. Rejections, quick break higher, and then eventually we slam down, taps the prior support, which was around this level here, which is around this level here for us. So even $4,000 is a great little target. And looking at this now, the way sometimes you'll see my take profits are a little bit lower than I actually anticipated, but all I'm doing is extending them a bit, because if this market spikes a little bit lower, it's always worth trying to catch that extra little movement. So I've already got some good profit today. I'm in a quick $60 loss on this one already. I think I've closed out quite a lot today, to be fair. I've had a pretty good day so far. Had a little bit of a loss on NZD, yep. So there was a bit of slippage on this NZD account actually, which the broker will be repaying me for. I was only meant to get, I think it was around a 2k loss. I ended up wiping out around 7.5 grand. So I will be reimbursed for that shortly. That is the beauty of Hugo's Way. Thank those guys very much for the help they do. There was a bit of slippage during the news, so that will be reimbursed. That's not a problem. That's always good to see. Very nice of them as well. So in general, guys, just kind of elaborating further on stop loss placement. For crypto, I leave these incredibly wide. It's just how I work. For the likes of indices, etc., very simple stuff. Straight into profit the minute they move higher. So as you can see now, this trades in $3,000 profit. It's rocketing. Should we hit there? That's $7,500 profit. Let me just drop to the 15. All I'll do, slowly over time, scale this higher because we've already seen these levels come through. I do not sit there and hold my trades in a very minimal, actually, just below that wick. I'm constantly adjusting stop losses. I'm constantly monitoring. I'm in a constant mode of vigilance because I'm always making sure I know what is going to be unfolding next. You should not be, especially with crypto, having tight stop losses like this and then leaving them there. You must always allow room first, which means your risk management must be calculated in line with every single trade you place. The minute you see these trades, let's just say now this just drops down to there, that's when I will immediately, once I'm in a good significant amount of profit, drop my stop loss into at least break even. And when I say break even, this is what I mean. It would be literally there. As you can see on the left hand side how many pips it shows. The equivalent of that wouldn't be 1,500, it would be like literally 150. So all I would do is quickly move that down to around 5 pips just to secure, or even 10 pips once we've seen a significant movement, just to secure those profits and at least cover the costs of spreads, etc. So it's very simple stuff, and many people really make this much more complicated than it needs to be. But I'm just showing you with margin trading, there has to be a very substantial wide stop loss before, because especially now in these uncertain territories, it just makes perfect sense to be a little bit more alert. So I thought I'd cover that as well whilst we're here. We're seeing that drop already. Nice bit of a indecision, a bit of indecisive spike. So realistically, even though I want to technically drop on 2 lots and try and make, let's just say 15, 20,000, realistically, if it falls down to my projected levels anyway of these targets here, I've made $4,000. I will simply re-enter at the premeditated calculated levels. Now, if you remember in the, what was I saying? If you remember in the Instagram live where I actually caught the counteractive trade from here, I caught the short here, and then I caught the immediate long making around 1.2 BTC pretty much in a heartbeat. The reason being is because I premeditated these levels, and I was doing exactly the opposite of what the sheep are doing. I'm being a wolf, I'm being an independent trader, and I'm preempting way in advance where price could be heading. That way, if price does begin to reverse, even if I do not have my full position loaded, I'm still making profit on the way down. If price falls exactly to my level, I will be able to add even more positions at a much more premeditated level, because once you have your original call come through, this is how you begin to get winning streaks, because I've preempted in advance all of these levels. And that means if this level is met and it pulls down to my next target down here, it means I'm in synchronization with the market and we are moving in sync together. So covering this now, here's why I'm a bit more indecisive on specific pairs. Ethereum right now did not meet that $153 level, which for now, I still believe it will come through. But looking at this right now, A, B, C, D extensions as to our original upside projected targets of $200 and beyond. So looking at this right now, the 4-hour looks fairly bearish, and it's good to see. We've seen a tap, we've broken through, we've tapped again. However, I do not believe this will sustain. And if before we even reach these levels here, I still believe we're going to pull back to at least $162 in a fairly sharp, sudden movement, just rejecting a very prior level of intraday support and resistance. And if we go back to the daily, again, I keep switching to these by accident. I need to get rid of these, they're quite annoying. 6 hour as well, just looking at this, tapping. However, it looks bullish, but when you drop down to the time zones you should be using, as you can see, huge spike. We could just be filling this wick and slamming all the way down. So remaining vigilant of around these levels as well. Even if we do not hit 52, we've got levels here where the trend line is again. And this could very easily be a false trend line breakout. If you look at the daily, drag that down to there. So realistically, more precisely, we've tapped, we've held, but for all we know, this could just slam through, hit this level and continue. Reason being, let's get those nice fibs up from here. A, B, C, C, potentially at these levels. 153 and 160. Where would those extensions then lead us? Exactly to our projected targets again, except all we're doing is just being a bit more vigilant and a bit more calculated. And all I would do with the main external trend line here, just add another trend line, because that's essentially what's occurring now. Tap this level, we're pretty much guaranteed we should see another continuation higher. Tap this level and break, the final trend line is below us, and what an easy way to catch a long all the way back up. I do not like to catch longs at random levels like this. I do not care, guys. This is one thing I'm really trying to drill into your heads here. This is why there are sometimes not always trading opportunities, because although we could technically enter here, going down to the 1 hour, great, we've tapped this level. Let's just make this more precise on the 1 hour. We've tapped, where's 4 hours, sorry. So we've tapped this level. Let's extend this out. We've broken through, we've tapped again. Now we enter long. Why would I enter long here when, if you zoom out to the daily time frame for 1 second, why would you long here when there's levels here, there's a trend line here, and your target's there? So let me just put this into a visual perspective. Target's there, potential support is there. Price is in between this level. You are at a point of indecision in the market where it could either blow through the roof or pull back down and tap these levels. You want to be putting these trades absolutely in your favor. So you do not want to be entering when you're in between a level of support and resistance, or a potential entry zone or a potential target zone. It is not worth the risk, and I do not like to take those risks. The reason I actually entered the BTC short originally, the first time where it's miscalculated, it was still at a crucial level. 5,800 was the first projected level. And unfortunately, we saw that little break higher. But overall, you could not fault a very precise rejection of this level. All the PA was adding up, and it was just a very unfortunate circumstance. So just showing you a bit of an insight as well into why I was taking that. Going to the chart at the time as well, if this price action was removed, we would have been at the absolute highs. Multiple rejections, it was looking pretty promising. Going over here now, it's moving into break even already, which is good to see. So again, now all you have to do is just wait for further confirmation. So the 1 hour candle's closing in 2 minutes. We'll see how this closes, because all I really want to see, ideally, is another break. Let's just say price can tap this level here around the 78.6 fib. I will just add another 0.5 BTC position. So let's put this around here. Just leave that there. Nice little precise entry. Dropping into profit, I really cannot complain. Things are looking great regardless. So a good example again is if we pull back here, tap this level, what a great buy opportunity. Pulls back a bit lower, scale in again, and just see how things unfold. So letting that unfold, things are looking good on all ends and on our behalf. Going over to XRP now. Again, a bit of a sticky one, because not only do we have this trend line here, I'll just show you this little fib I was looking at as well on the daily. So a B, C on that 61.8, little tap above, just falling short of the 78.6. Where are we looking at right now? 26 cents and 24 cents. But first of all, before we can even consider that, I'm focusing on 29 cents and 27 cents. Now, we have heard a few rumors that 24 cents could be unfolding. And do you know what? I do agree, but there was a reason I didn't agree, because we caught the long initially off this level. Now, many people were calling short for 24 cents around this level and even breaking through the 29 cents floor. And that is why we caught the initial long opportunity off this level back up to the Fibonacci targets. And if you go back to the Telegram to look at this point in time, you will see the long trade we executed on XRP. If you remember, it was a nice quick $3,000 win off that movement, which took just a week to fulfill upon reversing precisely from that level. Now we've fulfilled these regions. This is why I'm also a bit more anticipating now of a potential BTC short, as you can see, because it really is unfolding in real time in synchronization with XRP, which has now broken through that trend line once again, as we can see here. So looking at this, again, I wouldn't short at this level for a certain reason, but breaking through, we've tapped below, just again rejecting this level from once support to resistance, and we're now pulling lower. But again, why would I not enter short here now? Because technically it is looking fairly bearish, and it is looking like it will now fulfill our downside targets after awaiting the potential trendline retest and the Fibonacci retest. Well, let's go back again. Potential zones of entry, we're looking at around here. We've seen a reversal from there and a reversal from there. Where's our targets? Around here. First level is here. Where's price? Right in between. It's no man's land, and this is why I gave you the overall house structure in one of the prior Wizard Wednesdays as well, because you're allowing yourself to see that when you plot these levels, let's just say the floor of the house, the roof of the house, and the levels in between. Let me just get rid of this now, as you've technically got this level here anyway. What you are technically looking at is you are in the middle of the house. Why would you try and choose a bias when you're at the middle of the house? It's like if you're on the roof of a house, you would jump off because you want to hit the floor. But if you're in the middle of the house, you're going to jump and hit the middle of the floor you're standing on. If you're at the bottom of the house, you would just simply take the stairs. The way I see this is you are wedged in between an equilibrium. Do you want to short or long at a level, which is, in an XRP's case, this is precisely in between the roof and the floor of the house you are currently constrained in between. I don't care how bearish it looks, I will not enter a short of such a random entry like this. I will not enter a long, even if it's back to the Fibonacci levels to catch a short. I will simply await price to hit one of these levels here or there to catch a long from this region or catch a short from this region. Do not rush, do not jump the gun, as it will only end in further anguish. Going back to BTC one final time to round off this video and give you a much clearer insight. We are pretty much at the all-time highs now on the Bitfinex and Bitstamp time frames. Short here. Perfect, it's pulling lower. It makes sense. We are at highs. Knowing we have a little region just above here. Let's go back to the initial trade setup here. Actually, let's go to the Bitfinex chart just to relate this to Hugo's way a little bit clearer. So we had a little channel that we broke out of as well. Very sad to see. So again, that was another little reason there as well. But looking at this, A, B, C. I need to extend that out a little bit more actually. A, B, C, D. We've actually now hit this level on the Bitfinex time frame. We've spiked through, now progressing with that level. So actually, here is what we are going to do in this instant, because now I have another confirmation and further clarity on this situation. I will add another 0.5. What will I do with the stop loss on this one? So what a nice way to end this video. We'll drag that up there. $4,000 risk for a potential $8,000 win. I am more than happy to take those odds in my favor. The prior trade as covered, which was hit mostly at break even, etc. Well, guys, if I've pretty much closed out either a little bit of profit or break even, I'm still allowing the same risk to be applied to the future trade, as nothing substantial has been lost in the process. And hopefully now you can see why I am approaching this bias of the market. And that is why I'm not sure if it shows up. Does it show up? Just before that New Zealand dollar massacre, which they will. So basically this trade here, that was around 7.6k loss. So I've already made that money back today anyway, pretty much. But what they owed me for that trade was, I believe it's around $5,000. So I should be getting that back. I was only risking around, I think 2.6k, maybe even less, to be honest with you, but the stop loss did not trigger upon a news announcement. So hopefully we get reimbursed for that, and that will put me at a much more significant profit for the week, which I believe right now, once that gets reimbursed, should be around 15k for the Wednesday so far. So it's been a pretty good week. I withdrew $3,000 yesterday just to reward myself, and this is something I do stress 24/7 as well. Reward yourself for the hard work and dedication and time and effort and chart burning hours put into the market. I cannot stress this enough. It's very important to reward yourself. For example, if all of these trades hit profit now, we end up having a $30,000 or $40,000 week, I will withdraw $10,000 and go and enjoy it. I'll either reinvest it or go and spend it. So again, just giving you some live trade insights as well, just showing you how things are really working behind the scenes here at CryptoWZRD, and more importantly, to round up this video. Guys, the Wizard platform is at the final stages of launch. We are just finalizing a few new designs, a few new elements to the platform, and back testing absolutely everything and all of these crazy things that are oncoming. So I cannot wait to announce this now. We are literally at the boiling point of launch, and words cannot explain what I'm going to be producing and providing for every single wizard in the wizard community. But it goes without saying, let's leave this on a positive note. Let's see how this BTC short comes through, and let's see if we can catch the balls out on a potential counter trade. Because should we catch them out on a counter trade, what will we be doing? Looking at Bitfinex right now as well. We can now extend this because we've fulfilled the target. Well, we are looking at 5,500 as our first target, where the first 0.5 BTC will be taken off if we hit this level, and then I would take off the final trade at around this level here. And what I would do is just very simple. Let's just say this trade flies down and hits 5,500 first, which realistically it should do. It should hit this support floor first if we do see a reversal. Again, just monitor these highs over here. Look at where this correlates as well. First target here precisely with that level. Second target a little bit higher, which could be a tap and a closure below around $7,000. And again, thought I'd end this on a good note. We are not in a bull run until we are breaking these prior highs around this level. For me, until $8,250 is broken clean, even then 8,500, I do not consider this a bull market of any sorts whatsoever. So should we not see the downside bias and 8,500 gets broken, then we can give a very solid confirmation the bull market should slowly initiate itself over time, and liquidity and FOMO will kick in and the market will jump higher. In the meantime, we cannot be biased on anything. Read the price action. Again, lower low. Should we close even at these extensions here, it's still a lower high from the prior highs over here. Please use logic, please use sensibility, and please do not listen to people that are focused on just one simple bias. We have to be premeditated, we have to be open to all possibilities, and a nice lovely 4-hour closure there. So even looking at this now, little counter trend, breakthrough, potential retest, slam down, and that would be absolutely beautiful. And again, look at this. BTC just moving in channels consistently, up and down, up and down. It's quite easy to actually read. Besides a few miscalculations, overall, I'm hoping you are seeing a real insight now into how I'm trading. And I know I shouldn't be giving this away for free, but it's making me happy knowing that people are really going to be on board with the same synchronization of chart work as me. So guys, that is it for this Wizard Wednesdays. I hope this has been beneficial, and I thought I'd come back with a bang and some expert analysis, live trades, etc, etc. Have a good Wednesday, and see you in the Telegram very shortly.